Hey, good afternoon, everybody. Going to go Forex trades for today, Thursday, February 4th. Just had one trade in the euro to Swiss franc, as you see here. We do have a couple of correlation trades on that we're currently in, down slightly in one and about flat in the other. So let's go over some of the economic news that broke this morning. Deutsche Bank was out with a piece talking about, they're saying the Fed unwittingly confirmed a recession when it released its latest quarterly. I guess it was released late yesterday. Jim Reed from Deutsche Bank says 2 consecutive quarters of tightening standards has never happened before without it signaling an eventual move into recession. So as we've been saying all along, it looks like the economy is about to enter recession. Some parts of the economy already are in recession. Bank of England, the Governor Carney was out. Low inflation is due to oil prices, he said. We know is not accurate. They didn't have any inflation prior to oil collapsing. Why would he make you think that that's the reason there's no inflation? He says now is not time to raise interest rates. The UK economy is using up slack. Still more to go. The ECB was out saying they see increased risk of negative inflation rates, and that the ECB toolbox is not exhausted. So it looks like the ECB is trying to tell the world that they may be going negative interest rates soon as well. And I would imagine the Bank of England will probably be doing the same, and we'll be doing the same here in the States. I would think, because I won't be surprised if the Fed turns around and cuts rates back down, maybe even does a QE program, and in a year or two from now, we could be staring at negative interest rates right in the face. Let's see. Okay, another thing, EU came out. They published a new economic forecast. They now see GDP growth of 1.7 this year, 1.9% next year. The one good thing about that is at least they're being optimistic because those forecasts are lower than they were previously. Initial jobless claims came out, more jobless claims filed, so that was bad. Non-farm productivity was supposed to come in with negative 2.0% contraction. It came in with a negative 3.0 contraction. So another bad sign for the economy. Factory orders missed. They came in worse than expected with a contraction of 2.9%. Durable good orders came in with a contraction of 5.0%. If you look at just the core durable good orders, they were supposed to come in with a contraction of 4.5%. They came in with 5.0%. So not good at all there. What else? Goldman Sachs lowered fourth quarter GDP to 0.4% following today's bad factory orders and the weaker than expected construction spending the other day. UBS, they cut fourth quarter GDP to 0.3% from 0.7%. And ironically, in the face of all this bad news, Goldman Sachs and PIMCO both come out and they say they expect the Fed to continue to hike rates throughout 2016. Yet the market is not saying that. The market's saying otherwise. We had 10-year treasuries touched 1.82% yesterday. The all-time low on U.S. on 10-year treasury, I believe, is 1.37%, 1.38%, that area. So we're not that far off of an all-time low in 10-year treasuries. A month and a half after the Fed said the economy is strong and that they need to raise rates. Absolutely incredible. The market is telling the Fed, the market's now telling Goldman Sachs, and is also telling PIMCO, there's no way the Fed continues raising rates. The market is bringing down treasuries. The market's bringing down the Fed funds rate. So we shall see what transpires in the next meeting, which I believe is in March. So pretty interesting, all the news flow that came out today. As far as our trade, we had a signal to go long 1.11710. We got filled at 1.11714. This actually happened while we were not in the computer. We had our order in, we had our stop loss in, we had our profit target in. And you can see what happened. It just popped here. This was around 3:30 in the morning or so. We sold 1.11900. That's where we got filled. for 18.6, size adjusted 9.3 as we had 50% of our normal size. Again, we want to sell just ahead of the figure of 1.12000. That's just a big psychological level. You're going to have a lot of sell orders there, within a couple of pips of that. And it's exactly what it did. It went as high as 1.11982. So it almost went exactly to the figure before falling down. Maybe we left a little bit on the table, but since we weren't watching it, we figured we put it in. We probably could have put it in at 1.1192, 1.1194, and felt pretty comfortable that we would get hit. But you'd hate to see this thing, if you had it at 1.1194, you'd hate to see that it traded up to 1.1190 and then reversed, right? So to play a little on the safe side, since we're not in front of the computer, we stuck it in there, and beautiful trade, got hit, so it worked out fine. Like I said, we still have those 2 correlation trades, so we'll be monitoring them. Hopefully we can get out of them soon, but we'll see. Tomorrow is non-farm payroll, the biggest economic number of every month, so we'll get that along with the unemployment numbers from the U.S. government. That comes out 8:30 Eastern Standard Time. So that's it. We're going to wrap it up. If you're still trading now, good luck. If any signals come out, they'll be coming your way. And assuming we get some action tonight or tomorrow, we'll do another video tomorrow. And if not, have a great weekend, and we'll be back on Monday.